Oh, hi, Deborah.
Hi. It's actually all of us together. It's John, Deborah, Lori. I'm going to just change this to
The other one.
Okay.
So let me see here. So we were planning on just doing audio. Do you need us to do video or just audio in the slideshow?
Well, you might like to do some video. Hold on one second here. I'm going to sign on. Let me put up the slide about, well, it's still a little bit early, but let me put up the slide here. And Paul is sending me a message. So I need to send him the link real quick. So bear with me while I get all of this done. Let's see here.
Surely we're not going to do video. You got a mess.
Hold on a minute. All right, let's see here. I think I can send this to Paul like this. Copy the link. Bear with me.
Which one is mine?
And let's see here. Control V. There we go. Hold on one second. I've got something in the oven.
It's sitting there if you want it. Well,
I was told there was no video.
yeah.
Okay, now, so I've sent Paul that, and I want to share. Let's see here. Oh, here we go. Where is my, here it is. And there we go. Now, okay, so John, your question was, hello?
Oh, yeah, we're.
Yeah.
Can you hear me?
Yes,
Okay.
I can.
All right. Yeah, so we're not actually, the room we're in, we're not set up for video. We're set up to share our screen with
Okay.
the PowerPoint presentation.
Okay.
Actually what I'll probably do is.
Okay, bear with me. My oven timer went off. Let me go get that. Okay. So let's see, we've got, let's see. We have some attendees already in the audience.
Okay. And then you're going to turn screen sharing over to us after we start, correct?
Yes.
Okay.
Can you hear me clearly? I'm kind of over to the side.
Yes, I can.
All right.
Shannon, can you hear me? This is Paul.
Yes, I can.
I almost had a relapse. I couldn't find the link. So disregard my messages.
Okay, did you find it? I sent it to you.
Yeah, I know. It got lost somewhere, but I'm here. So
Okay.
how's everybody doing? I lost my picture again.
Yeah, I need to put mine up too.
Well, I had mine up, but I don't. This happened the last time I went on a webinar where I lost my picture.
Uh-oh.
What happened?
Well, I did stop my video, but now I don't know how to get mine back. Let's see.
We're still in practice mode, right?
No,
No, we
because when
lo-
I do practice mode, I can only do that for myself. So actually, there are
Okay.
attendees
So
in
people
the
are listening to
audience
this.
listening to this. Yes. Oh, we have somebody raised a hand.
No, that was me.
Okay.
I'm just making sure I understand the system.
Oh, there we go. I got my video back.
I still don't have video, so it's not a big deal. Yes. Hello?
We're here.
Well, good afternoon, everyone, and welcome to the Richardson Chamber of Commerce presentation on the changing landscape of small business relief during COVID-19, presented in conjunction with Bland Garvey. I am Paul Bindle, Senior Vice President of the Richardson Chamber. It's my pleasure to welcome you today. Since the beginning of this crisis, when the safe shelter orders were announced, the Richardson Chamber of Commerce offering informative programs that provide information to our member businesses and the business community in general on how businesses can survive this economic crisis by staying open, planning to reopen if they have been closed, and the ever-changing landscape of the financial relief that has been made available through the CARES Act. Last week at this time, we heard from the Collins Small Business Development Center and the regional offices of the Small Business Administration on the latest programs available to help small business. Today's program is a follow-up to that presentation because of the rapidly changing rules and regulations that are related to these disaster loans, payroll assistance, and other tax-related programs. Before I introduce our speaker, let me go over a couple of quick housekeeping notes. If you want to ask a question, we will hold questions until the very end of the program after the presentation. You will need to raise your hand so that our technical producer and I can then recognize you, unmute your microphone, and ask your question. So we'll do that towards the end of the presentation after it's over. So with us today is John Garvey Jr., who is the managing shareholder of Bland Garvey CPAs and Wealth Advisors. He is a CPA, personal financial specialist, and a prior member of the AI CPA Investment Committee. Bland Garvey works with small businesses, taking care of their accounting, tax, and investment needs. They understand how frustrating it is to feel like you're on your own and you don't have the help that you need to be able to be successful. For 50 plus years, this team of professionals at Bland Garvey have been giving clients clear guidance so they can make their decisions with confidence. Joining John today for the presentation are Lori Eads and Brian Howell. So ladies and gentlemen, please welcome John Garvey Jr.
Thank you, Paul. I'm just going to get our screen share up real quick here. And Paul, will you confirm that you can see our screen?
Yes.
Okay, great.
You're on.
Well, thank you to Paul and Shannon and the Richardson Chamber for having us on today. We are going to talk about the ever-changing landscape of small business relief. It seems like about every day or every other day, the Department of Treasury, the Small Business Administration, and the lenders and the Internal Revenue Service are changing the rules or clarifying the rules as we move along. So today I have Brian Howell. He's the fine-looking man on the left side of the picture, Lori Eads and myself, and we'll be splitting up the presentation today amongst the three of us. We're going to cover the four major components of the CARES Act for small business. These are the things that we think are going to be the most beneficial, and these are the four items that we tend to get the most questions from our clients. We're also going to cover some new tax deadlines, some new tax provisions, and then we're going to spend just a few minutes talking about the relief in the CARES Act that relates to retirement account owners. And then we'll talk about some potentially new developments, and then we'll leave time at the end for questions. So I just want to make a brief disclaimer that we do not know the specific circumstances of everybody listening on the call today. So we would encourage you to use this information to gain some general knowledge, and then please consult with your accounting and legal counsel to make sure you understand exactly all the nuances and how they apply to your unique circumstances. In addition, these rules are changing and evolving at a pretty rapid pace. At the end of the presentation, we'll give you some resources where you can track those developing changes with the SBA and the Department of Treasury and IRS. So we'll have links to those that you can use for your own benefit. So we're going to start today by covering the major components of the CARES Act, and Brian Howell is going to start us off by talking about economic injury disaster loan.
Thanks, John. Hi, everybody. Thank you for your participation today. So what you can see in front of you is a chart with 5 columns, and I'm going to be talking about that very first column in white, the economic injury disaster loans, which for abbreviation, it's the EIDL loans. So these are distributed through the SBA. It's not through your local bank. To apply for this, you have to go directly to the SBA website and to get those loans. The maximum amount of those loans are going to be $2 million for individual businesses. Since it's SBA, the qualifiers are small businesses of 500 or fewer employees. These are your typical loans where you need to be affected by the COVID-19 crisis. So they're looking for somebody that's had reduced revenue, had to lay off, furlough employees, maybe even close your business, some kind of economic impact to qualify for these loans. The SBA will be asking businesses to provide typical financial information. That could be tax returns, financial statements, payroll information, all those kind of things to basically prove up what their injury is. The use of these loans are basically to provide small businesses with working capital. So it can be used in a number of different ways, whether that's payroll, rent, the sick leave, etc. Basically just to keep businesses functioning through these hard times. I'm going to get into a little bit further later, but there's a couple of different components to these loans. There's an advance. The advance piece is forgivable, meaning it's not a traditional loan in the sense you're going to have to pay it back. It's more of a grant that the government's going to give you this and you can spend it, and there's no loan forgiveness that you're going to have to take into income as we understand it, and it doesn't have to be repaid. The other part of the loan is not forgivable. So let me go into those two different components a little more in detail. So on the left-hand column, you've got the emergency grant advance. Now, when this was first announced a couple of weeks ago, everything kind of just said, hey, here's $10,000 that your business can avail yourself to, and it's going to be fully forgivable, or it doesn't have to be repaid. We've learned recently, the last few days, the SBA has clarified that and said, basically, this is going to be calculated based on the number of employees you have. So if you've got 3 employees, presumably you would be able to only get an advance of $3,000. If you've got 20 employees, you're still maxed out at the $10,000 figure. And as I said, the advance does not have to be repaid, even if you don't actually qualify for the additional EIDL loan itself. So let me talk about that. So the EIDL, that's what I was saying was a maximum $2 million loan. It's non-forgivable, so it's going to be a traditional loan. You can have terms of up to 30 years. For small businesses, the rate's 3.75. As I understand it, nonprofits, the rate for those entities will be 2.75. And what I didn't mention previously is this is an expansion of an already existing program that the SBA had, but what they've done is they've really streamlined the process for applying. If you click on that link that we show at the bottom of the page, it's a 3-page form. It asks very basic information. After the SBA gets that, they will contact you and ask for further documentation. But to kind of get in the queue, it's a very streamlined process. Lastly, the last thing I had up there is these loans can be unsecured up to $25,000. They're going to want some kind of collateral for loans larger than that, but the first 25 is unsecured. All right. Now, John's going to talk about the PPP loans.
Yeah, so these are the Paycheck Protection Program loans. These are the loans that have been really receiving a lot of press of lately. This is the program that the SBA and Treasury made $349 billion of funding available for these loans, and these loans are on a first-come, first-served basis. As of the close of business day before yesterday, there had been already 1 million loans processed for over or almost $250 billion. I think as of yesterday, that number was up a little higher than 260 billion has been used so far. So I'll go over a few of the just general overviews of this program. Then I want to get into some of the specifics about how you can use it and how you can turn this into a forgivable grant. So again, these are loans backed by the SBA, but they are administered through banks and local banks, national banks, savings and loans. The maximum loan is $10 million. They're again available to employers with 500 or fewer employees. They're also available to self-employed individuals. And you do have to attest, if you're applying for this loan, that you have been negatively affected by the COVID-19 pandemic. The loan is determined solely by the amount of payroll costs you have. So you calculate, for most employers, you will use your 2019 calendar year payroll, and you will calculate an average monthly total that does include health insurance, employer paid health insurance, and employer paid retirement benefits. You get a monthly average and you multiply by a factor of 2.5, and that's the amount of eligible loan you can potentially get. These loans can be used for payroll costs, continuation of health insurance, salaries, interest on a mortgage, rent, and that is a mortgage on real property for the use of your business. So if you own the building your business operates in, that's the mortgage that would qualify. Utilities, and then these costs can be forgivable if they are incurred and paid for in an 8-week period from the date of the loan origination. We're going to talk about that 8-week period a little bit more here in detail. But I think it's really important for borrowers and small business owners to understand the intent of the PPP loan program. The intent is to keep employees on or get them back on employers' payroll and off of the unemployment rolls, or to keep them off the unemployment rolls. It's really designed to provide funding for payroll plus a few overhead items. So it's really important to understand this 8-week period because it has everything to do with the forgiveness of the loan. The 8-week period begins on the date the lender makes a first disbursement of the PPP loan proceeds. The lender is required by law to make that disbursement within 10 calendar days from the date of your PPP loan approval. And as we said, a lot of loans are in the process of being funded right now. These loans can be forgiven, but there's some rules that you've got to be very diligent in keeping track of. So first of all, only the items that are spent within this 8-week period are eligible for forgiveness. Not more than 25% of the forgiven amount may be for non-payroll costs. Again, if you go back to the intent of the PPP loans, it's basically saying that at least 75% or more has to be for payroll costs. Again, you can use that for payroll costs and benefits, interest on a business mortgage that that mortgage had to have been in place prior to February 15th of this year. You can also use it for rent, but that lease had to have been in place prior to February 15th. And you can use it on utilities such as electricity, gas, water, transportation, telephone, and internet. These loans that are forgiven are not taxable income. And the expenses, we believe, are still deductible expenses. Based on what we know at this time, there's no specific language in the CARES Act that would make these expenses non-deductible. So if you think about it, this is a huge gift in that you get to take a deduction for something that you didn't have to recognize revenue to be able to pay for those items. So you do need to understand a few things about how the loan forgiveness amount could be reduced. Again, 75% or more has to be on payroll costs. And then if there's a reduction in the number of employees, or there's a reduction in wages of 25% or greater than 25% reduction in wages, you could have a reduced forgiveness amount. Now, there is an exemption in the law that says for employment or wage reductions occurring between February 15th and 30 days following the passage of the CARES Act, and that, I believe, was passed on the 27th. You will not have to reduce your loan forgiveness if by June 30th you eliminate those reductions in the number of employees and in the wages. So what are some things you can do to make sure you do maximize your loan forgiveness? First is follow the specific guidelines provided for your lender. The CARES Act allows for the forgiveness calculation and determination to be done by the lender, not the SBA. Now, all those determinations are subject to review by the SBA, but it's the lender that's going to make the calculation. So you need to follow any specific guidelines that the lender presents to you. If they don't give you any guidelines, we think you should consider potentially setting up a separate bank account that the loan proceeds go into, and then you only pay those qualified expenses out of that account for that 8-week period. And also potentially set up separate accounts in your accounting system, in your general ledger chart of accounts, so that you have a clear audit trail so you can prove what the expenses were spent on during that 8-week period of time. We also believe that the banks are going to request payroll reports, copies of invoices, and canceled checks for those qualified expenses. So the last thing I want to cover here is just what I'm going to call the 8-week traps and some budget considerations. So if you have applied for one of these loans, and if you are still waiting funding, or even if you just received the funding, we think you need to go ahead and prepare and work on preparing a detailed 8-week budget to make sure you can maximize the expenses paid during that period to follow the rules to get the maximum amount of forgiveness on these loans. We want you to be aware of the frequency of when you pay compensation and benefits. This 8-week period, spending period, that clock may not, and that calendar may not coincide exactly with your payroll cycle. So you may need to work with your HR department or your payroll vendor to make sure you maximize the paydays within this 8-week period of time so you get the full benefit. Be aware that if you have furloughed employees, you have this opportunity to bring them back. But if you wait until the end of the 8-week period to bring back furloughed employees, it may be really difficult to maximize the loan forgiveness amount. Because again, if the intent of this funding is to get them back and there's this 75% rule, you won't be able to wait till the very end of the 8-week period of time. And also realize that there are some businesses that are based on when, from a regulatory standpoint, when they can open, that an employer could bring back furloughed employees, have them on the payroll for 8 weeks, and then the 8-week period is up, but yet their business is not still open. So you just got to really look at the timing of these expenses and look at the calendar and really plan everything out. So that's all the comments I had at the moment for the Paycheck Protection Program. So I'm going to turn it over to Lori right now, and she's going to talk about the next 2 items on this chart.
Hi, thanks, John. The 2 items I'm going to talk about are the employee retention credit, and there is also an ability to delay payment of employer payroll taxes. And both of these are overshadowed by the other 2 things that we just talked about, because these are really a function of getting, more of a refund on or credit against payroll taxes that you've paid for employees that you've kept on as employees. And as you can see under the employee retention credit one, if you've gotten or obtained a PPP loan, you are, that makes this one, you're ineligible for this one. And this is the more valuable one than the delay of payroll tax one, the next one. So this employee retention credit is for 50% of wages for employees up to $10,000 per employee. So it basically is a $5,000 value to you, but you have to claim it on your quarterly payroll report. So it's not like the other 2 loans that we've talked about before where you get money in your bank account. You actually have to file your quarterly 941 to obtain this money, or you have to, there's an advance credit for it you can also get. So it's not as, immediate as these other items, not to mention that they are, in our experience and what we've gone through so far, the first 2 items, there's more dollars there than this. So in my opinion, this is sort of available to people that have not qualified for or don't want to take a non-forgivable SBA loan or were not qualified for the PPP program. So it's fairly, do you want to go to the next slide on? The employee retention credit is, it applies to everyone that had a partial or full shutdown, which I think could be most people. But if that did not apply to you, there is this tricky calculation of comparing your 2019 gross receipts to your 2020 ones. But I think most people would qualify under the partial or fully shut down scenario. And self-employed individuals are not eligible under this. So it really is only people that have payroll, submit W-2s and file 941s and all that. And again, you claim it on the 941 quarterly. So it offsets first the employer portion of Social Security tax, and then to the extent it exceeds that, it's refunded. So they are making you pay the employer portion of the Social Security tax at 6.2% first. So they're not really giving anybody any credit for that amount. And the way I see how this works, you can reduce your payroll tax deposits in advance. So like, let's say you anticipate this would apply to you, you could go ahead and reduce a payroll tax deposit you're about to make. And they're saying they're not going to penalize you if you end up being wrong on this. So that's a nice thing. And obviously, again, if you hope to get the PPP loan or you've gotten it, then this wouldn't apply to you. So I'm imagining this is going to be kind of a down the road thing for people that don't end up getting the PPP loan. And then the last item is this deferral of payments of employer payroll taxes. And this is really just a deferral of payment of the employer portion. Again, that 6.2%. So it's not a credit, it's not a grant, you're gonna have to pay it eventually. So you can defer this part. And again, there is more flexibility with the PPP loan in this one, but we would recommend you don't do this if you have any hope of getting a PPP loan until you're sure that that's not something that you would be eligible for. And that's pretty much it for those 2 items.
All right. One of the, as you probably are familiar with, you've been seeing lots of things in the paper and the press about IRS due dates have changed, and there's been lots of change on that. The first thing they came out and they said, you know, due dates are still April 15th today, but the only thing you can defer is the payment of tax. And then about a week later, they came out and said, no, we're going to move back the actual filing date to July 15th from April 15th. But that's been clarified since, and there's all kinds of things now. Pretty much all the returns that would fall due between April 15th and July 15th now, so including individuals, C corps, estate and trust income tax returns, gift tax returns, all those items that would typically fall with an April due date are now pushed back till July 15th. And it's not that they're extended, that the new due date for this year only is July 15th. So if your CPA or yourself can't get your return done at July 15th, at that point, you will be required to file an extension. And unlike previous years, it's still not going to be a 6-month or a 5-month extension that you're used to. Your extension's only going to take you out till either September 15th or October 15th, which one would normally apply. So it's going to be a much shorter extension period this year. So also the state of Texas has come out and said Texas franchise tax returns that are usually due May 15th, those are now pushed off to July 15th also. And then the other thing that the IRS has clarified recently is your first and second quarter estimated tax payments. So individuals as well as businesses that need to be making quarterly payments towards the next year's tax, those would have been April 15th dates for the first quarter and then June 15th for the second. Those are both now due at July 15th. So July 15th could be expensive for some people in that they're going to have a payment due for their 2019 return. Then they're going to owe both a first and second quarter, which could be up to 50% of their tax, all due at July 15th. So I'm kind of dreading that day, knowing that I'm going to have some phone calls that people that may be causing some pain. The IRS has generously said that penalties, interest, additions to tax, all that stuff for, either non-filing, non-payment, those kind of things, those are all suspended up until July 15th. So anything that's late right now is not incurring any interest or penalties. Retirement plan contributions. A lot of people make an IRA contribution, or they'll make maybe an SEP, a simplified employee pension payment, for their 19 return between January 1st and April 15th of 2020. It's kind of a normal thing. You've got up till April 15th. Well, this year, to just kind of make it all sync up, the IRS has said that those retirement plan contributions for the prior year, now the due date is July 15th. And the same is true on HSA health spending account contributions. Those are also due July 15th. As I said a while ago, there's no extension needed to get your return to the July 15th due date. That's automatic. That's the new due date. Extensions would be filed if you can't get your return filed by July 15th. So, and as I said, those are only going to be 3 months to take you. For individuals, it takes you to October 15th. Partnership returns are going to be due if extended September 15th. All right, there's some tax provisions. Also, the IRS realizing that businesses were going to be suffering this year. They've came up with some ways to try to generate some cash for these small businesses. First thing is knowing that some businesses are going to incur losses, net operating losses. So typically a business that ended up with a loss for the year. Previous law was that those losses could only be carried forward and only carried forward at a certain percentage. The IRS now allows we can even go back to 2018 and 2019 returns that have even been filed, and we can amend those, and any net operating loss can be carried back 5 years. So if you had a loss, say, on your 2019 return, we could carry back that loss to a prior return with by filing an amended return and generate a tax refund for people. So we anticipate that we're going to be doing a lot of that. So I would suggest that you talk to your CPAs and ask if there's any of these provisions that you could avail yourself to. So the next item is qualified improvement properties. So this was actually kind of correcting a provision that just kind of got overlooked when the Tax Cut and Jobs Act was signed into law back at the end of 2017. QIP, those are basically improvements to commercial property. Think finish out generally, walls and stuff like that. Those have been changed from 39-year lives to a 15-year life now. And they're also eligible for complete 100% expensing in the year they're placed in service. So there's been returns, and this is also kind of retroactive back to 2018. So another thing that we will be doing here in our office is returns that we filed a year ago where the business incurred some QIP property. We probably have depreciated that over 39 years, but now we can go back and amend those returns and fully expense it or depreciate it over a much shorter life, and again, generate some refunds for our clients. One of the next item is charitable contributions. Those have always had a limitation. So in recent years, that limitation moved from 50% of your income up to 60% for cash donations. So take a situation where if your income's $100,000, you could deduct charitable donations made in cash. So this is not gifts of appreciated stock. You could take a deduction up to $60,000 if you had $100,000 of income. New law changes that all the way up to 100%. So if you've got a really philanthropic person, they can donate up to 100% of their income with cash donations for the year. This is just for the year 2020. And as you're probably aware, the standard deduction a couple of years ago was greatly increased. So probably only about 20% of the general population now claims or itemizes their deductions. Most people just take the standard deduction. So knowing that, beginning in 2020, the IRS is allowing a $300 above the line charitable donation. So even if you don't itemize, you can still take a $300 additional expense item on your return. That's not obviously a big item that's going to make a big difference, but it will help people.
All right, so I'm going to touch on a few things. This is our last kind of major section. we're going to talk about the changes to retirement account owners. So the first is dealing with retirement plan distribution. So if you, your spouse, or a dependent in your home has been diagnosed with COVID-19 or coronavirus, or if you have experienced adverse financial consequences, you may qualify to take a coronavirus-related distribution. So this distribution, if you're under the age of 59 and a half, will not be subject to the normal 10% penalty. Plan sponsors are not required to withhold 20% federal income tax on this. So if someone wants to take a distribution of $10,000, they'll get a full $10,000. They can always have tax withheld. And then the unique thing about this is this money can be rolled back into the plan or into your IRA within a 3-year period of time from the date that the distribution was taken. Now, this is going to be normally taxable distribution unless you do the rollover, and by default, you will spread the tax, or the income will be split evenly over a 3-year period of time, beginning this year and then the next 2 years. And so this is really designed to allow people to kind of almost take a short-term loan from their retirement accounts and then to pay it back if they get their feet back underneath them from a financial standpoint. The changes in company retirement plan loans have been, those rules have been changed. First and foremost, for companies that have qualified retirement plans like a 401k plan, first, the company plan document has to allow for loans. If it doesn't allow for loans, you can always amend it to change it. But the CARES Act has allowed for an increase in the maximum loan to go up to $100,000. The prior limit had been $50,000. You can now take a loan up to your 100% of your vested balance, again, limited to $100,000. And loan payments can be delayed for 1 year period of time. And then the other big change for a lot of people in the CARES Act is the change to the required minimum distributions. So you're not required to have an RMD from your retirement plan or your IRA if you're of the age that requires that. And if your 2020 RMD has already been taken and you took it within the past 60 days, you can transfer it back to your IRA and avoid that taxable event. And these required minimum, the waiver of the required minimum distributions also applies to inherited IRAs. So that these provisions and what Brian talked about a moment ago were all just designed to free up cash flow this year to give people relief. So we've got a few just new developments that we wanted to talk about that would relate to some of what we already talked about. I think the EIDL grants, Brian already touched on. The PPP loan funding, that's $260 billion has already been lent out of the $349 billion. Congress has, or the Secretary of Treasury and the President have asked for an additional $250 billion, but that has not made its way through Congress yet. There's a lot of infighting regarding how that should be done and other things that should be added onto it. And then we've had some clients who've received, healthcare providers has started receiving the Health and Human Services Medicare stimulus payments over the last few days. And those have mysteriously showed up in physician accounts and the like. So we've gotten a few questions from our clients. Brian, you want to take, or Lori, take one of these?
Well, I'll take the first one because it sort of relates to what the list of things that John was just mentioning. When we were planning this presentation last week, we still had nobody receive any of these funds that we've been talking about. And Friday, we started to have our healthcare clients start to get those HHS payments, which were based on their, Medicare billings if they were a healthcare provider from 2019. And then starting this week, Monday and Tuesday. We've seen people starting to receive their PPP loan funds in their accounts and some of the EIDL money. So the money is starting to flow. And today we didn't really talk about the individual stimulus payment too, but we've had people are receiving those this week too. So finally the money is coming into people's accounts.
One of the questions we get a lot is, what if my bank is out of funds? What options do I have? This came up specifically as it relates to a lot of Wells Fargo clients, because Wells Fargo had announced they quickly hit their $10 billion lending limit because they were under a regulatory cap. The government did extend that cap for the purposes of the PPP loans. But we have seen cases where clients have been scrambling to find new banking relationships because their existing bank either cannot process their loan or will not process their loan request. A lot of banks are only processing these loans for clients that have an existing business bank account and a debt relationship with them. This problem has eased up from a couple weeks ago because there's over 4,000 financial institutions now approved to process these loans. So hopefully that won't be as much of an issue as it was a week or 10 days ago.
And just something to add, interestingly, in the beginning of this, it appeared that the big banks were going to be the ones that were really the best ones to work with. And, because the smaller banks were unsure if they were going to participate in all this. Well, as I've personally seen, it's the small banks that have really come through and the loans have been funded. And, it's the larger banks that I haven't really seen people actually get the funds from. Or they've been later than the smaller banks. So they really did a good job of being flexible and getting people's applications in and funded.
Right. Okay, so as we said, this is just a list of the recent legislation and guidelines that have come out. We started with the Family First Corona Response Act, then the CARES Act, then the SBA issued an interim final ruling on the PPP loans. Then, the same day, the borrower application was changed. Then a few days later, we got clarification via the form of an FAQ document from the SBA. In this time frame, the Internal Revenue Service has issued 7 revenue notices and 2 revenue procedures clarifying things. And then just yesterday, SBA issued another interim final rule clarifying some of the technical guidelines of the PPP program. So that's a lot. It's a lot to digest. But here we've got a list of kind of the relevant links. Obviously, you can go to the first one. Actually, we don't have the link listed out. We'll get that sent to the Richardson Chamber. But on our website, there is a downloadable version of the chart that we showed earlier in the program comparing all the different loan programs. That is a downloadable resource for you. We have a separate resource that you can download that is specifically related to retirement account owners. And then you can go to either of these 3 links for the Small Business Administration, Department of Treasury, or the Internal Revenue Service. All 3 of them have specific sections on their website related to COVID-19 coronavirus programs and relief options. And then if you have any questions that you want after the fact, you can go to our website, get in touch with us, or you can email Deborah Carroll at the email address here below, and she will get you in contact with the right person here so we can help answer any specific questions you have. So that's all the prepared remarks we have. So Paul and Shannon will just turn it back to you and open it up for any questions that our participants may have.
Thank you very much, John, and a great presentation. We do have some questions. You can either use the chat line or the Q&A line. I failed at the beginning of the presentation to realize that we were in a webinar, which does not have the raise your hand feature. So I'll be glad to repeat the questions. And we've got the first one here, comes from Dan Bertuccini, and it says, I had an employee resign in March and I did not replace him yet. I had to include him in the 2019 payroll, but of course he will not be included in the 8-week payroll period of the PPP plan. Do you know how that should be handled or will be handled?
75% reduction.
So as long as you get, that's in this forgiveness period. So as long as you get another employee hired at an equivalent salary by June 30th, that should not reduce your PPP loan forgiveness. But if you do have a permanent reduction and you do not replace that person by June 30th, then it will reduce the amount of the forgivable PPP loan proceeds.
Okay, here's a second question from Jerry Cornelius. I'm unsure of the date for the 8 weeks, the day the loan is approved or funded. Let me repeat that. I'm unsure of the date of the 8 weeks, the day the loan is approved or funded? Question mark.
It is not the date the loan is approved. It is the first day that the lender distributes the funds to your account. So let's just say that you were going to borrow $100,000, but for some reason, they're going to send that to you in two $50,000 increments. The 8 weeks starts the first day you receive any of the funding.
Okay, so again, feel free to ask questions using the chat or the Q&A. We don't have any right now, but let me ask you this. One of the challenges, and you've mentioned this a couple of times during the presentation that you had, is the different rules that change and the banks that are going through some issues. Has that begun to settle down? Are we beginning to see the relief actually being able to be made without having a whole lot of challenges that we had the first few weeks that it was available?
Yeah, we think a lot of that has calmed down. What was interesting, what Lori said, that the smaller community banks were actually had their act together and were lending money and taking applications and approving loans and dispersing money sooner than the large banks were. The large banks really tried to do it all in an online process, and they just had a lot of technical challenges with that. A lot of that has passed, but we feel like we're kind of in the eye of the hurricane right now. So passing through the first wall of the hurricane was getting through the rush of how do you do the applications, how do you do the calculation and so forth. Now everybody's waiting on funding, and as we move through the other wall of the hurricane, that's going to be the whole 8 week spending and then the forgiveness process. The American Institute of CPAs, as well as other major labor organizations, have been lobbying the Department of Treasury, the SBA, to come out with more clarified rules regarding the forgiveness process and what documentation is required. There are only very broad definitions given right now, so we are expecting some more guidance for that. But this whole issue of bringing back furloughed employees, the 8 week period, maximizing, and then the forgiveness is going to be kind of the next wave of serious work, and where more clarifications are needed. But we think all the banks have really kind of got their processes down at this point for the lending process.
Yeah, that was my next question, is whether or not the banks have begun to get their hands wrapped around this. I know last week in some conversations that we had with some banks that it was a mess to start with, a lot of information that hadn't been written on rules and things of that nature. So it appears that's finally beginning to settle down. So that's good.
Yes.
Any other questions out there? We don't have any questions. Anybody wanting to ask a question? Use the Q&A feature at the bottom of your screen, or you can use the chat. I'll be glad to repeat the question. The other, here comes one right now. Let's see what this says. This is from Stan Bradshaw, and it says, I believe the Act specifies for PPP forgiveness that you must maintain the same number of employees as you had in January and February of 2020. Now, it seems the SBA is more focused on gross payroll expense during the 8 weeks rather than the number of employees. Have they abandoned the number of employee measurement?
No, they have not. There's really two measurements. It's going to be the number of full-time equivalent employees and the amount of wages paid.
Okay, that's at this point, don't have any questions. Anything else that that needs to be added? I guess if we don't have any questions, we can go ahead and begin to kind of wind things down here. Anything else, John, you and your team want to add before we kind of close it down?
No, I think the most important thing to do is really make sure you're in communication with your, obviously your CPA, but also your lender. So as these lending, as the forgiveness rules are clarified, again, it's going to be up to the lender to determine the amount of the loan that can be forgiven. So you need to make sure that you're working with them and you're going to satisfy their documentation requirements for the forgiveness of the loan.
Yeah, and there's still a lot more to come on, I'm sure, rule changes and things. It's going to be important for them to stay in contact with their financial advisors and CPAs, I would think.
Yes.
Oh, here we got one more real quickly. So if I apply for the PPP on May 15th, and it takes 10 to 14 days for the process, and start payroll June 1st, I'm good through July using the funds, correct?
Yes, because you can apply for the PPP loan as well. We know the program goes through June 30th. We don't know if a bank will allow you to apply on June 30th or if they wanted to get everything funded by June 30th. So I would contact your lender to get clarification on their specific interpretation of the window of opportunity for the PPP loan.
Just as a reminder, we're getting ready to wrap this up again. Thanks to John, Brian, and Lori for their help, and to the firm of Bland Garvey for doing this. We appreciate that. Do want to remind everyone this has been recorded, and we'll have it on our website as soon as we can edit the recording and get it posted. And we'll also have the information that John mentioned on his last slide. They'll send that to us. We have a COVID-19 page on our website that has information on resources and things of that nature. We'll have that posted to make sure that you have the information. We'll be doing some more programs. There's another one tomorrow that's more focused on freight forwarding issues related to transportation. In addition to our regular programming that we've got for young professionals, there's going to be a session tomorrow at 10 o'clock on how you can give back to the community and work with operations such as the Network of Community Ministries and Richardson Methodist Medical Center in supplying their needs. So look at our website for that information. That's at richardsonchamber.com. Again, thanks to Bland Garvey. We appreciate that. We will be talking with you later. Stay in touch and good luck. And this concludes our webinar. Thank you very much.
Thank you.